The more things change, the more things stay the same. And that is a reoccurring theme, especially over these 4-year cycles. Now, me personally, I still believe the 4-year cycles are intact. There may be a little slight disturbance about what's going on, but I still do think we're headed in the same direction. I'm going to tell you why. So if you're not familiar with this concept, these are the 4-year cycles. Everything pretty much kicks off with a halving, which happens the first time in 2012 for Bitcoin. Then roughly a year later, we'll get an all-time high. That happened in 2013. And after that all-time high year, then we get a dip and a reset. This happened in 2014-15. And then we repeat the process. 2016, halving. 2017, all-time high. 2018-19, dip, reset. 2020, halving. 2021, all-time high. 2022, 23, dip and a reset. And this recently, 2024, we had a halving. And then 2025, an all-time high. But the big question is, what's going to happen into 2026 and beyond? Will we see even higher highs? Will we see a pullback? Or is it like a lot of the proponents, which will say there is no more Bitcoin winters because of the institutions are here, because things have changed so much? I happen to disagree. So this video is going to piggyback off of the Bitcoin Magazine Pro video we did with Matt, who is the lead analyst over there. I will link that in the description if you'd like to get just a general information, charts and data points and important pieces. And Matt covered that beautifully in this video. So I'll link that in the description. And he says pretty much the same thing. I'd love to be wrong, but the data proves or states that we are going in the same direction. And as we go through this, we're going to go from the history of what happened with Bitcoin to the present day. It's like hurdles to really get to our all-time high and blast off. There are different factors that we have to actually get across. There are different sentiment. There are different trades. There are different things that are going on in the background that all these hurdles have to be hit so we can hit our all-time high and move into massive price appreciation. When things stumble, then we see a pullback. And in some cases, we see crashes. So as we see that the macros coming in and we see that there's quantitative easing or money printing, we see the Fed's on board and the rates are being cut, everything's great. Then all of a sudden, oopsie, looks like we have a bad player and leverage comes in and people get liquidated and we have a big pullback. Or we have something that happens in the background and we're going to take a look at this historically, and people start to sell off because of different various items that are there. And we just trip over a hurdle. And that's pretty much what is going on from 2013 on. So this is just a little historical recap. So in 2013, we had that massive bull market. Remember 2012, we had a halving in the bull market. And the drivers back then, which was over 10 years ago now, 12 years, it was mostly early adopters, tech enthusiasts, libertarians, and the first wave of crypto investors. And they did the best if they had held on to their Bitcoin from 2010, 2011, when it was just pennies and dollars, all the way up to roughly $1,000. This was driven by retail speculation, no big institutions. It was boosted by media hype from Bitcoin crossing 1,000 for the first time. And as we go through this, think about how this correlates to what's going on in today's market. Market structure, though, it was far less liquidity and fewer exchanges. Mt. Gox was a dominant exchange, and then it collapsed in 2014. Oh, look at that. A centralized exchange goes down, and that crushed the confidence. Very volatile, thin order books, big price swings on small volume. So why didn't Bitcoin go and just keep going up and to the right forever? Well, it's very simple. There was a Mt. Gox hack we just talked about. The collapse triggered the crash. There was lack of institutional support. But Rob, we have a ton of institutional support today, so we should keep going up and to the right. No. This meant confidence evaporated quickly back then, and Bitcoin fell roughly 85% and stayed in a multi-year bear market. In 2017, the bull market happened again, right after 2016 halving. The drivers were early retail investors at scale, thanks to Coinbase, which had just come into existence not too long ago, and easier access, because that's what people like. Easy. Make it fast, easy, and cheap, and they'll come in. The first wave of mainstream media coverage and global awareness, there was an ICO boom. The initial coin offerings, this happened in 2017, and created demand for ETH and new altcoins. Back then, everything was essentially built on Ethereum. I mean, almost everything. And it was because of the ease of use and the different ICO or initial coin offerings that came about where people were speculating and buying up whatever they could. And you didn't even need the actual project. You could just have a white paper and people had $1 billion valuation. It was a crazy time. Bitcoin became seen as the gateway to the whole crypto market. So of course it went up. Market structure, many more exchanges, not just Mt. Gox. Growing futures market, there's a thing called a CME launched Bitcoin futures in December 2017. Added both hype and the ability to short. And we'll see what happened there. Bitcoin reached about almost 20,000 with far deeper liquidity than 2013. So why didn't it keep going up forever? Because Bitcoin is the future, correct? All you have to see is that it's very sound money. And there's nothing that goes against it, like the Federal Reserve of printing money to infinity, because Bitcoin is finite, not so fast. The ICO bubble burst, regulatory crackdowns, projects failed, liquidity dried up. Again, these are all hurdles that we have to go through. And if it's not just Bitcoin, it's other cryptos that make things falter. CME futures launch gave big players tools to short the market. And I can remember when the Winklevoss twins were talking about Bitcoin 2017, they said, if you don't believe in Bitcoin, then just short it. The CME is coming in. And they said, sure. And they shorted the heck out of it and crashed the market. Retail euphoria flipped to panic selling. It always happens because that's human nature. And Bitcoin corrected 84%, triggering another long bear market, 2018, 2019. And this is what I was talking about. On the 15th of December, we hit our all-time high, almost 19,665. Didn't hit 20,000. And 2 days later, you know what happened? CBOE Bitcoin futures came about. And the traditional finance players came in and said, you think you guys got us? Guess what? Grab some bench. We're going to short the hell out of it. And they did, and they crashed the market on top of everything else. And of course, human nature says, wow, we just went down 10, 20%. I'm getting out of here. And then 20% became 50%, and 50% became 80+%. And that's what happened in 2018 and 2019. But there was some key differences between these two time frames. 2013, it was small, retail driven, very fragile, crushed by centralized exchange Mt. Gox. 2017, it was global, retail mania with ICOs, deeper liquidity, but still lacked real institutional adoption. But they ended the same way. More things change, the more they stay the same. There's a parabolic rise, natural over-exuberance, brutal crash, and a multi-year bear cycle. And that will lead us to the last cycle, 2021. The drivers back then was institutions, which is what we'd like to see. Tesla got in. Elon Musk came out and said, we're going to allow you to buy a Tesla with Bitcoin. And oh, by the way, we're going to put it on our balance sheet, and I'm going to personally buy Bitcoin. And it worked out great. And this guy named Michael Saylor came in, MicroStrategy, Square, hedge funds, and publicly traded miners. And let me tell you, when that happened, it was the same thing. Institutions are here. It'll never go down because these guys know just how great Bitcoin is, and they won't sell because they've got diamond hands and laser eyes. Anyhow, spot ETFs were denied, but the future ETFs approved in October 2021. There was a DeFi and NFT booms. Remember that? Decentralized finance and NFTs. And then there's a thing called the metaverse where you can have your own digital land. That worked out awesome. Ethereum and Solana ecosystems exploded because of it. And then there's a little note here, quantitative easing, pandemic stimulus money, plus ultra low rates fueled speculation. Now, quantitative easing, there was a lot of money printing. But as a reminder, money printing has been going on since essentially the 1910s, 1920s, but not like it was in 2020, 2021 when we had this thing called the coronavirus. I don't know if you ever heard of it. It was a pretty big deal. The market structure in 2021, there was a ton more liquidity. There was more custodians and regulation on-ramps that make things very simple. PayPal, Robinhood, and Cash App got in, which means it would never go down. More derivatives and leverage products like Binance, FTX, Bybit played a huge role, and the market cap went into trillions, not just hundreds of billions of dollars. So why did it go down? Well, there was a couple of reasons. First of all, the macro. Like I said, hurdles. When you have the Fed pivoting and saying, we're going to raise rates. And guess what? Instead of quantitative easing, we're going to quantitative tightening in late 2021 because we put too much in the balance sheet. Now we have to offload. Then there was a thing called a leverage unwinds. Luna collapsed. Three Arrows Capital, which unfortunately was behind a lot of this nonsense. Then you had Celsius, Voyager, FTX in 2022. So all that leverage when people thought this will never go down, the bill comes due, and that's what happened to the collapse. institutions sold off risk assets, just like in 2017, and they're going to do it again. Bitcoin crashed along with the stock market as well, because in 2021, there was some pretty big names selling their stock. One of those would be Mark Zuckerberg from what was called Facebook, and he changed it to Meta because of the metaverse. See how that's working out. And of course, a host of other people like Jeff Bezos and the rest of the people that just want to sell off because things hit all-time high, got a little too frothy, and they dumped on us. Now we're in 2025, bull market. So far, it's looking pretty good, and this time it's different. I mean that. This time it is different. But the more things change, the more they stay the same. The drivers are, hey, we got favorable U.S. regulations. SEC is on board. There's no more choke point 2.0. Although it does exist, I have a problem with my bank personally. I've heard some other people. So it's not like all banks are allowing crypto investments and no problems. Then you have the Genius Act and a host of other, the Bitcoin Act coming in. And that's, of course, regulation that is positive. The Fed is supposed to be cutting rates, hopefully in September 17, 2025. But we'll see. We've had some conflicting data. Spot Bitcoin and ETH ETFs were approved, and that was a big boom. Bitcoin and crypto strategic reserve strategy was announced by the U.S. government, and there was also retirement access through 401k plans to invest into crypto. And that means trillions of dollars is coming in through those 401ks and retirement accesses into our market. In the market structure, like we just talked about, macro tailwinds, expectations of Fed easing and declining dollar as the Dixie goes down, Bitcoin goes up. Institutional calm, more institutional holdings. I don't know if you knew this, but greater than 10% of Bitcoin is held by those institutions, buffering volatility. What does that look like? Well, from bitbo.io, we've got ETFs, roughly 1.5 million held, or 7% of the total supply. Public companies, that would be places like MicroStrategy and such, they hold almost 1 million. That's 4.48%. Private companies, 426,000. Countries, 517,000, 2%. So total combined is roughly 10.1%. Wait a second, Rob. You got 7.13%. Public companies at 4.48, private 2, and countries 2. That's way more than 10%, which is true. But as a reminder, ETFs are not all owned by institutions. There are retail and advisory and institutionals that are holding the Bitcoin ETF as well as the Ethereum ETF. So if you'd like to learn more about ETFs and who gives advice, who takes the advice, who's giving the advice, and why at some point we see a bunch of dumps as far as ETFs, there's a link in the description where we talk about institutions and who is dumping and why they're dumping. 2020 bull market so far, here's the risks and why it won't go up forever. Short-term pullback signs. There's profit taking that's resulted in 2 to 4% drops after recent peaks, and people will still keep selling because that's what they do. Institutions will sell their risk on assets. Again, look at ETFs. And if you don't think that BlackRock doesn't own their own ETF, you have another thing coming. The same thing with ARK and the same thing with Van Eck and a host of other ETFs. They own their own ETF. Watch the video. And it comes down to euphoria, leverage, and macro issues. What I mean here is this. Going back, euphoria and overevaluation. Just like 2017 and 2021, there's institutional enthusiasm with a little bit of retail. And again, watch that Bitcoin Magazine Pro video. There's near-term valuations are stretched with Bitcoin already above 120. Could we see Bitcoin do 150K or 200K this cycle? Sure, why not? Do I think that it's going to happen overnight? I think there's going to be a lot more time between that. Historically, whenever parabolic growth, and we've seen massive growth in Bitcoin, when that outruns adoption fundamentals, it ends in a sharp correction. But Rob, this time is different. All these institutions are coming in, they're gobbling it up, and it just keeps going on and on and on. I get it, but I will still stick to this, and that is that it's not everybody is a Michael Saylor. Not every company is a MicroStrategy. Some of these companies got a little bit over their skis, and I expect them to sell off, especially the Ethereum companies. And when they do that, we have contagion, and Bitcoin will also sell off. Also, there's leverage in the system. 2017, retail on unregulated exchanges was hefty. 2021, FTX, Three Arrows Capital, Celsius, Voyage, over-leveraged derivatives. 2025, it's more regulated, but institutional leverage, structured products and option markets are at all-time highs. And they're going to keep doing that. Now, if Bitcoin corrects hard, which depending on what your definition of hard is, that leverage can unwind and cascade into forced liquidations. Just today, we've seen 24-hour liquidations at almost $1 billion, and it's only been a pullback of roughly 3%. It is August 28th, 2025. And we're going to see more of those, especially as different things happen. But if Bitcoin goes down, and again, I'm not saying that it's going to go down 86% or 85% or 77% like last time, but let's say it's a 50% pullback or a 40% pullback. And people say, that's not a crash, it's just a pullback. When that happens, what do you think happens to altcoins? Or if altcoins start to really go down, what do you think happens to Bitcoin? There is a little bit of contagion there, so just be aware. The macro liquidity dependence is huge. 2021 crash was triggered by Fed tightening. That's rates and quantitative tightening. But it's interesting to note here that in 2021, the Fed rate cuts and quantitative tightening weren't until March of 2022. We hit a high on November 7th, 2021. So why did it take 5 months until the Fed rate cuts and quantitative tightening, and people point to that as the reason why everything collapsed? I don't think that was it. And if there was sell-off, human nature, the more things change, the more they stay the same. 2025 rally is being fueled by expectations of Fed easing, rates and QE. But as a reminder, Fed will raise rates again at some point. They don't cut forever. If inflation flares up or the Fed delays cut, crypto could retrace violently because this cycle is still macro dependent. There's some things we have to define before we take a look at a couple of different charts here. And that is this. What is quantitative easing? What is quantitative tightening? Quantitative easing really comes down in QT, comes down to assets, rates, and money supply. That's all you got to remember. Assets, rates, or money supply. If we want a mnemonic, I just think of RAM. Rates, assets, money supply, as the Federal Reserve rams this down your throat. Quantitative easing, central bank buys government bonds or other financial assets from banks and institutions. Quantitative tightening, the central bank reduces its balance sheet by letting bonds mature without reinvestment or by selling assets back in the market. So let's take a look at QE. Central bank action, they buy assets, they add money. And then what happens with the money supply, it increases. So it's not just straight up money supply increase, they got to buy those assets first. The interest rates, they go down. Economic impact, it stimulates the growth. Market effect, usually bullish. Problem is when they start to print so much money, you know what happens? Inflation. And when inflation gets out of control, they have to do the exact opposite, which is quantitative tightening. The action is they sell those assets or they let them expire. The money supply decreases. It pushes the rates up. Economic impact, it slows the growth and curbs inflation. That's the big thing. You can't keep having so much inflation because then the dollar becomes worthless, even though at some point it will be. The market effect is usually bearish, but that is just the cycles. And this is what I'm talking about here. The federal funds target rate. And Bitcoin has gone through all of these cycles. In 2013, the funds rate was flat, almost zero. And then they raised those starting in 2016 and 2017. So as the Fed funds rate was actually going up, we still hit all-time highs. So I know when people say, we can't hit all-time highs as the rates go up. It's not true. It's already happened. And then in 2018, we kept going. Then we went flat, and then we cut like crazy because of that thing called coronavirus in 2020. Then we were flat in 2021, and everything was good. But as a reminder, in November 2021 is when we hit our all-time high. You can see it right there. However, the next part of when they actually started to raise rates and the supply went down, when they raised those rates, it was 14th of March of 2022 for the first rate hike. 5 months in between those two. So it wasn't just the macro, it was other factors and hurdles that caused us to rapidly decrease in valuation as far as Bitcoin and the total crypto market. Also, quantitative tightening. The Federal Reserve's total assets, remember, they put those on. In 2013, they put a little bit on, not too bad, and we were going up. And then from 2016 to 2017, we were pretty much flat, quite honestly. And the Fed didn't really add much to their balance sheet. And then in 2017, we had all-time highs, then took a little bit off. Then the coronavirus came, and they put their assets on massively as they bought up in 2021. And again, as far as us going down, we didn't go down until 2022. February or March. So there's another 5-month gap between the total assets as they were continuing to put assets on the balance sheet, which you can see right there into the first quarter of 2022. So it's not just macro. And lastly, the M2 money supply keeps going up. That part just really doesn't really change. And again, we saw a little bit of a decrease in the money supply in around March or so, or 1st of April 2022. And now it keeps to go up. M2 money supply, you can see there was a little bit of diversion from 20th of March as it actually went down and down to 2022. And then we hit a bottom on 2023 and up we go. But even then, when we did this, you can see that the Bitcoin price of 28th of March 22 was 47,000. And as we went down to 20th of November 2022, we can see that the Bitcoin price was 15,000. But before the M2 money supply bottomed all the way down, we actually recovered already. So we can see there's a little bit of lag time between money supply and Bitcoin price. And lastly, that was just looking at the US M2 money supply. As a reminder, the global M2 still states the obvious, which is we still need a liquidity and we're still going higher. And the M2 money supply, even in the downturns, you can see it pretty much line up in the old-fashioned way. Does that mean that we just follow the M2 money supply? No. I will tell you again, the more things change, the more they stay the same. There's a reason why we will keep having these cycles. It's because of human nature. Now, I could be wrong, and everything could be awesome, and we could just go to Valhalla and just have a massive, huge run-up and keep going up forever because these ETF and these institutions that are coming. I just don't see it, and I will continue to say take profits because nobody ever went broke taking profits. That's it for today. So if you like today's video, give it a thumbs up. Consider subscribing. What we talk about is time sensitive. That's it for this one. Thanks so much for stopping by. I appreciate you. I'll see you on the next one.